let's take a look at this. Back in November, Matt, we took a listener question from @BTCapital12 on Twitter. There was a situation brewing with Synchrony and Walmart and litigation that the massive retailer was threatening. Matt, we're going to let you take a little bit of a victory lap here, and I'm going to go ahead and hand it to you and explain away.
Yeah, I thank you for giving me my "I told you so" moment. A few months ago, or in the middle of last year, actually, over the summer, Walmart announced they were dropping Synchrony as their co-branding partner. Big account. I liken this to kind of using another Amex comparison when Amex lost Costco. So it's to that magnitude. It's a big deal to them. But the real drama came a little bit later. Well, one, as everyone knows, Walmart and Sam's Club are the same company, but they're two different credit card products in terms of Synchrony's line of products.
Right.
So there was a big question mark as to what this meant for their Sam's Club business, which is also a huge part of Synchrony's business. Do they keep that? Does that go to Capital One where Walmart's going? And two, Walmart announced that they were suing Synchrony for $800 million related to losses on their credit card portfolio. They said Synchrony didn't do a good job of analyzing credit risk, and there were bigger losses than expected, and they weren't making as much money as a result. So that was a big question overhanging. I forget my exact words, but I said that it was somewhat of a negotiation tactic because Synchrony had to decide whether it wanted to keep the Walmart loan portfolio, sell it to Capital One or somebody else, and there were a few things that needed to happen before the relationship could be completely dissolved.
Right.
So just recently, this was also a big surprise of earnings season. Synchrony pretty much said, not only did they have a great quarter, but they pretty much said the two things investors really, really wanted to hear, that they're keeping the Sam's Club business. The Sam's Club credit card will remain a Synchrony product. That's a big deal. And even bigger, that Walmart is completely dropping its lawsuit against Synchrony. An $800 million weight off their shoulders is a very nice little late Christmas present for Synchrony investors. So the markets hate uncertainty. Uncertainty has been lifted in regards to the litigation risk. Sam's Club is still a Synchrony product, so the hit they took from the Walmart loss is now just confined to their Walmart product. So this is a big win for Synchrony shareholders, which you're seeing reflected in the share price. But Synchrony still trades for a very cheap multiple. They're a very economically sensitive business. Store credit cards tend to, default rates tend to really move with recessions and things like that. But their profit margin's so great that it would literally take another great recession to really put them in the red. So I think the market's fears in that regard are overblown. We just got some great relief. The business did really, really well this past quarter and this past year. And I still love Synchrony at a stock, but shareholders who listened to me last year got handsomely rewarded this past week.
Hey now, everybody. Good job.
I wish I would have shut up about it and bought some myself, but unfortunately that wasn't the case. That's
not our job, I guess. But, hey, it sounds like all's well that ends well, and good call, because I remember the show talking about that. And for listeners, for posterity, go back to that November show, listen to what Matt said, because he nailed this one. So good job, Matt.